Hey guys, it's DeMarco. In this video, we're talking about Ichimoku Cloud strategy. Let's get into it. So in TradingView, go to indicators and type in Ichimoku. And this is the one you want, Ichimoku Cloud. Add it to your chart. I have it saved as a favorite. I'm just going to change one setting here. So now we can see we have several lines added to our chart. So what do these all mean? Well, this is multiple indicators in one indicator to determine support, resistance, momentum, and trend just by glancing at the chart with these indicators. This is a Japanese indicator first published in 1960 by Goichi Hosoda. Hopefully I said that correctly. There are 5 components to this indicator. We have this purple line back here, we have this blue line here, this dark orange red line here, this light green line here, and this bottom orange, light orange line here. Let's get into each one of these components to learn more about them. This blue line is the Tenkan Sen. It's also known as the conversion line, and it's the average of the high and low price of the previous 9 bars. And this can be used on any time frame, daily, weekly, 15-minute, 30-minute, any time frame. The second line is the Kijun Sen, or the baseline, and this is the average of the high and low price of the previous 26 bars. The third component in this indicator is the Senkou Span A, also known as the leading span A. Now this is the average of the Tenkan and the Kijun projected 26 bars ahead. So if we look at this green line here, we notice that it continues even past the current price, and it continues 26 bars ahead. This fourth line is the Senkou Span B, or the leading span B, and it's the average of the high and low price of the previous 52 bars projected 26 bars ahead. Same with the other one. Projected ahead. Both the Senkou Span A and Senkou Span B, each of these lines helps to form what's known as the Kumo, or the cloud. Now when the Senkou Span A, the green line here, is above B, the orange line here, that would identify a trend as being bullish. If we go back in the chart, we can see that the green line is below the orange line, A is below B, so this would be considered bearish. The fifth component is the Chikou span. It's considered a lagging span, and it's the current price shifted back 26 bars. So if we take an arrow, we can see Tesla's current price, and it's just shifted back 26 bars. Now, when this is above the current price at that point, it's considered bullish. If this purple line was below the price at this point, it would be considered bearish. Now we're going to see how it all plays together. So let's say that you want to take a long position here on Tesla. Well, what are some of the things you would look at in Ichimoku to see if it's a good position for you to take? Well, first we would take a look at the trend. By looking at span A and span B, we can see that the green line is above the orange line, so it's in an uptrend, so that's good. We can also see that the current price level is above the Tenkan Sen and the Kijun Sen. So this is also a good indication that it's in a bullish trend. If the current price was below these 2 lines, that would be considered bearish, and we might not want to take that. Also, when the Tenkan, the blue line, is above this dark orange or red line, that would also be considered in an uptrend, in a good direction. Lastly, we would take a look at the Chikou span and make sure that it's above the price at that point. So once all those things are together, we can say, I want to take an entry here to go long on this. Now, there's some limitations to this indicator. One of them is the longer time passes that it stays above the cloud, the less this indicator is useful because it's extended for such a big period of time. So what we're going to discuss now is the crossover, when the Tenkan crosses over the Kijun, and how we can determine breakouts. We're going to take a look back in time to a trade that I took on Tesla a few months back. So we're looking at Tesla's chart from February 12th, 2021, and we can see that Tesla's price has been well above the cloud here for quite some time, several months, about 4 months, from November to February. Now, during that time, we have the Tenkan Sen and the Kijun Sen, and the price is above them, which is great. And then also we can see that the Chikou span is well above the price as well. So it's very, very bullish. Now, when I was watching Tesla for quite some time, I noticed something. I noticed that from November all the way up to this point here, we haven't seen the price cross below the Kijun Sen. And we also haven't seen any crossovers between the Tenkan Sen and Kijun Sen. So the blue line and this dark orange red line. So there was no crossovers that happened here. Now, usually when there's a crossover, that means that it's going to break either to the upside or downside. So as you can see here, at this very point here, this is the very first time that it crossed over. Right here. Now, also, if I look at the Chikou span, it is above the current price, but it seems like it's going to go lower. Now, ideally, if you're a more conservative trader, you might not take this trade, but because it was the first time that I saw this crossover, I wanted to take this trade. So I shorted Tesla by using options. I bought a put option and I shorted Tesla here in that sense. Now, the cloud, whenever the green line is above this light orange line here, or span A is above span B, we can see it's bullish and in an uptrend. So the cloud is going to act like support in this scenario. So I wasn't looking to short it like to 400 or something like that. I was going to probably sell the option once it came down to around like 675, somewhere around here, if it did come down this low, because I was expecting it to possibly bounce back up because it would find support within the cloud. Now, another indication that Tesla was short here is that this is a supply zone. We identified this as a supply zone because the price is made an all-time high back in January of around $900. So it was having some resistance, and every time it tried to get up to this level, again in February, it only reached about 878. It was having a hard time here, or right here it was 880 was another low. So it made the 900, then 880, and then it's making another low here. So lower high, lower high, lower high. So we're seeing that it's starting to come down a little bit, and then we have a cross here. So I'm expecting it to come down even further. This is how you use your supply and demand zones to help you make trade decisions. If we play this, we can see that Tesla starts to drop into the cloud. And now we have this crossover here. Now we can also see that the price, these candles are below the Tenkan and the Kijun, right? The conversion line and the baseline. And remember I said whenever the blue line is above the red, is considered bullish, and vice versa. Whenever the red is below or above the blue, it's considered bearish. So we can clearly see that it's trading below these lines here, and it's in a bearish direction here. We also see that the Chikou span, this lagging line here, is below this price at that point. So this is another indication that it is bearish. Now we can see, this is interesting, we can see it come right into the cloud, and what happens here? We have this big wick right here. Meaning what? That the price came down to this level, this demand zone, and got bought up very quickly. So it hit 618, or the low is 619 according to that, 619, and it got bought up quickly, and the candle closed above this. So that's definitely a bullish sign right here that this is a demand zone, and the price is going to continue to move up, similar to our previous example that we used when we talked about supply and demand trading. So we'll continue to price here, see this movement comes right into the demand zone, the bottom of the demand zone. This is why we use demand zones and not just support and resistance lines, because here it hit the top and here it hit the bottom. But does this mean we should sell right here at the bottom? No, we want to sell at supply and buy at demand. So this is going to continue. Let's see what happens. It bounced up from the demand zone, and it's trading now. It's starting to trade below the cloud. So this is a bearish signal as well, that it's trading below the cloud. So at this point, you wouldn't really want to take a position long or short. Just let it ride out, because you want to make sure those 5 components are checked. So here we have number 1, the price now is in between these two. So it's kind of like indecision, like, should we buy here? So when you're not certain on something, you shouldn't take the trade. We're also below the cloud, so it could still be bearish. We don't have a crossover of the Tenkin and Kaijuns to go to the upside. We don't see that yet. So maybe we don't take a long position. We want to see that confirmation. We want to see some more things pan out before we make a decision to actually enter a trade. So I'm going to continue it along here. And now here's another thing. We can see that the price almost crosses here. But you don't want to be too aggressive. You want to follow the rules. Ichimoku is designed specifically with rules. Sometimes I take a more aggressive approach in trading, but based on other factors. Maybe you saw the supply zone. Maybe you saw the demand zone. Maybe you saw the MACD or RSI or something else that gave you indication that it's going to go one way or the other. Use those in conjunction with Ichimoku to make your trading decision. Otherwise, as a beginner, just use Ichimoku and just use the rules of Ichimoku. So if we continue here, we can see that we have this cross right here where the blue crossed above this red line here. Could also see that the Chiku is starting to get above the price at that point, which could be a good sign. But we have this cloud here, and this is span B above span A. So what does that tell us? That means that this is going to be resistance here. This is a resistance level. So we might not want to buy here. We want it to break above the cloud. It wants to be above the Tenkin, the Kaijun. The price at the Chiku, the lagging span, has to be above that current price. And this candle needs to be above the cloud. Look at that. Boom. Price breaks above the cloud right into this supply area. And then it drops pretty quickly. So should we buy here or should we wait? I would wait to see how it plays out. And price is going sideways. And a lot of times you'll see this. You'll see a crossover happen here. Well, is it going to go lower? Well, if this is resistance, maybe it's going to go lower. Where's the Chiku? Chiku is at the price. It's not below. So we probably shouldn't take a trade here either because we have one of our components that isn't aligned with the position that we want to take. We want to make sure that all 5 of them are working together to make the best trading probability in your favor. So let's play it, and it drops. So you're saying, oh, we missed that trade. Okay, fine. We missed that short position trade there. That's okay. But let's see. Let's see how it pans out because we want to make sure that it's the best odds for us. And now, again, we're in the demand zone. So in the demand zone, the price gets bought up here. So maybe we want to buy here because the last time it came to this level, this $543 level, it got bought up pretty quick. And then it came down and it bought higher at 590 or no, 98. And then it dropped again to 541. And now it looks like it's bouncing up again. So let's see how this continues. The problem is, if you are aggressive, you take the demand zone, you take this purchase right here as soon as it touches. If you're conservative or a novice trader or just learning Ichimoku, just learning how to trade in supply and demand zones, maybe you wait until the blue line crosses this red line here and we get above the cloud and the Chiku is also below the price. So that's still bearish. So we're like, there's too much indecision. There's too much uncertainty. Take the trade. So we're going sideways. We're testing that demand zone, accumulation going on. It's the bottom of the base. And then we have this cross right here. So that's an indication that it could go up to the upside. But what else do you have? If you're not looking at any other indicators, you don't know anything yet. If you use the MACD or RSI, you can add that to this and see, or a momentum indicator or something to see, but we don't have that on this chart. So all we're using is supply and demand zone and Ichimoku Cloud. Now let's play it. And remember, span B above span A, this is considered bearish still. Now the Chiku is above the price at that point, which is good. We have the price kind of going sideways above and below the Tenkin and Kaijun. So it's like, not too sure yet. And we finally have these 3 candles here that break above the cloud. We have this crossover above the cloud, Tenkin and Kaijun above the cloud. We have the Chiku above the cloud, and we have this candle here. So maybe you would take a long position at 709 right here. And maybe you would put a stop loss either at the bottom of the demand zone, or you could even put it at the bottom of the cloud here. We could also see that the cloud is twisting. So instead of this being resistance now, it's twisting towards a support. and it's potentially going to trend higher here if we look into the future, the forward span, right? The leading span. So let's take a look. Okay, so it came down, so now you're at a loss. But maybe you didn't get stopped out yet. And it's trading above the cloud. Trading above the cloud. And that's where we are today. So let's take a look. So from this candle to today, that's 9% gain. That's a great profit right there. 9% is great, especially on Tesla sometimes. So let's recap. First, we want to confirm the trend by glancing at the cloud. Is span A above span B? If it is, then it's considered bullish. Or is span B below span A? That would be considered bearish. We also want to confirm the momentum. Is the Tenkan-sen and Kijun-sen, is the price above them or below them? If it's above them, it has some bullish momentum. If it's below them, it has bearish momentum. Also, we want to look for breakouts. Breakouts are identified when the Tenkan-sen and the Kijun-sen cross over each other, either to the upside or to the downside. If we cross to the upside, then we want to also look at the Chikou span to see where that is. Is it above the price or below the price? The more of these indicators that are in your favor for a specific direction, it's going to be better probability that you make money off of that trade. Wow, that was a lot. I'm glad you guys got through this video, and I hope you learned something new. I know it's a lot and it can be overwhelming when you first start trading, but the more that you learn these indicators and the more that you actually use them and see them on charts, the more you'll be able to identify the information at a glance and make better trading decisions. But it's also when you put everything together. Like I had mentioned, it's not just a one indicator rules them all. Some people think like that and it works for them in their strategy. But what I found is I need to use things like supply and demand zones, the Ichimoku Cloud, and even some other indicators like the TTM squeeze, which I'll discuss in my next video. I hope to see you guys there. If you have any questions, please put them in the comments below. Make sure to like and subscribe. I work hard on these videos for you guys. I hope you find value in them. If you do, definitely subscribe. I'll be posting some more content soon. See you guys in the next video.